Crypto trading can feel like a roller coaster. Huge wins, sudden crashes. It's thrilling, but also incredibly risky. The truth is, most traders lose money not because they choose the wrong coin, but because they don't manage risk properly. In this video, I'll show you exactly how to protect your money, reduce your losses, and trade smarter. Let's get one thing clear. Losing is part of the game. Even the most successful traders lose 40% or more of their trades. But they still profit because they manage their losses. They use tools and strategies to make sure no single trade can destroy their portfolio. Without risk management, you're not trading, you're gambling. This is one of the most important rules in all of trading. Never risk more than 1% of your capital on a single trade. Say you have a $5,000 trading account. The maximum you should risk per trade is $50. It sounds small, but it protects you from emotional decisions and big losses. Small, consistent risks keep you in the game. Think of a stop loss as your emergency brake. It automatically sells your asset when the price drops to a certain level. This limits your loss if the market moves against you. The worst mistake a trader can make is to trade without a stop loss and hope the price will come back. Hope is not a strategy, discipline is. Before entering a trade, you need to calculate your potential reward compared to your risk. A good rule of thumb is a 1 to 2 or 1 to 3 risk to reward ratio. That means if you're risking $50, you should be aiming to gain at least $100 to $150. This way, even if you only win 40% of your trades, you can still be profitable. How much of a coin should you buy? That depends on two things: your account size and the coin's volatility. If a coin is very volatile, like some altcoins, you should take a smaller position. Tools like position sizing calculators can help you stay consistent. Never go all in, no matter how confident you feel. Overtrading is one of the fastest ways to lose your money. Jumping into trade after trade, especially after a loss, often leads to emotional decisions. Set a maximum number of trades per day or per week and stick to it. Quality matters more than quantity. Trade less, but trade better. Don't put all your money into a single coin or token. Spread your capital across different assets to reduce your overall risk. That way, if one coin crashes, it won't wipe out your entire account. Smart traders also keep some capital in stable coins, ready to deploy when a great opportunity appears. Managing risk isn't just about numbers, no, it's about mindset. Fear, greed, and FOMO, fear of missing out, destroy more accounts than bad analysis. Always trade with a plan. Accept losses without chasing them. The goal is not to win every trade, but to stay in the game long enough to win big over time.